Just make camera a participant. So it's done. Site's mute. Okay. Let me now start the webinar. Just to wait a minute so everyone can join. Good, so I'm just going to kickstart. Hello, everybody. Welcome to the monthly edition of UCL AI Insights. I'm your host, Adriano Koshiyama, a research fellow here at the UCL Computer Science Department. The field of artificial intelligence is flourishing in research, and the rate of adoption by government and industry increases seemingly by the day. AI also opens possibilities for new business, a new way of doing business, and I'm a witness over these last 5 years or so. I've been around UCL with the amount of startups that have come out over the last 5 years, and I presume Professor Philip has seen way more than I have seen so far. And I think the most almost like a household name is DeepMind, and then from that one, so many other companies came forward, and then also before that as well. So to explore this area of entrepreneurship, of tech companies, etc., how can we make it towards a billion-dollar company? In this webinar, I bring in Tunde Kehinde from Lydia, CEO and co-founder, and Professor Philip Treleaven from UCL Computer Science, that will discuss the potentially billion-dollar innovations AI presents. I'm just going to do a quick bio reading. So Tunde Kehinde is the co-founder of Lydia. Through its digital platform, Lydia analyzes over 1,000 data points to help great business owners access financing and build a credit score through an easy and inspiring lending process. Lydia has disbursed over 20,000 loans to small business across Europe and Africa. Tunde is a seasoned emerging markets entrepreneur who co-founded Jumia Nigeria, the leading e-commerce platform in Africa, and Africa Courier Express, the leading last-mile e-commerce delivery company in Nigeria. Tunde holds a degree in finance with honors from Howard University and an MBA from Harvard Business School. So welcome, Tunde.
Thanks, Adriano. Glad to be here.
Thank you. Our second speaker, in fact, our first speaker, second will be Tunde, is Professor Philip Treleaven. Professor Philip Treleaven is a director of the UK Centre for Financial Computing Analytics and professor of computing at UCL. 25 years ago, his research group developed much of the early fraud detection technology and built the first insider dealer detection system for the London Stock Exchange. For the past 18 years, Professor Treleaven's research group has developed algorithmic trading system with many of the leading investment banks and funds. And for the past 6 years, they have worked on algorithmic regulation with the Bank of England and FCA. Current research includes the application of machine learning and blockchain technology to financial asset management and regulation. And I should say that Professor Philip was my supervisor, so I'm very happy to have him around. Welcome, Professor.
Thank you. And I also will, before we started the recording, just say that you were looking forward to attacking me rather than the other way around.
It's a vengeance day.
Okay.
So before I open the floor to Philip and his presentation, feel free to ask any questions using the Q&A option on Zoom or via the live Q&A on YouTube. Please use the hashtag UCL AI Insights. So take it from there, Professor.
Thank you. I'd like to talk a little bit about the changing culture particularly in the computer science world or the data science world. The computer science department at UCL, like many others, are starting to generate startups on an industrial scale. and more students and staff are seeing entrepreneurship as a sort of career opportunity. If I can just, this isn't a boasting, but if I just talk about my own PhD students that I've formally supervised over the years, I've got 2 unicorns, a female-run hedge fund, and probably around 12 PhD students who've sold something for over $10 million each. Okay, and as you can imagine, this has a big impact on the students that are coming after them. And the universities, this is a sort of outgrowth, this cultural change from the machine learning groups worldwide, where more and more of the staff and students are actually getting involved in commercialization. So if you go back sort of 30 years, university departments like ours just did pure research. And then we were encouraged to do applied research, which is, that had some potential impact, but probably didn't get involved with any companies. And then the big thing in the 80s and 90s were all these industrial programs, in particular like Esprit in Europe, where we got involved in collaborative research. And what I say at the moment is that we're entering a new phase, which are called enterprise research, where the students, even more so than the staff, are actually getting involved in the commercialization and launching startups. And they find it very exciting. So for example, just around me at the moment, we've got over 15 different student startups under development, and it's increasing. We have a very simple, low cost model. And that is that students interested in doing entrepreneurship get together and do an applied research project that's got some commercial potential, and then they just grow it. So they'll build something, it might be an asset management system or a law tech system or any of these sort of data science technologies that we're involved in. Obviously, some of them will just take it through and do a very interesting thesis and then leave, and some of them will actually take it forward into a startup. So even when it's a student project, they engage with client companies, probably not getting any funding. Then if it turns into a real startup, the client companies started to pay them, and so they have sort of bootstrap finance, but also the students are starting to apply for government grants and that to actually fund themselves and fund their research. And the great thing about this is there are lots of these grants available, and you don't have to give up any of your equity. And then slowly, in a non-risk way, you can actually grow a startup company also, almost like a plant. Some of them will thrive, but the great thing is the university then becomes an incubator. At the very least, you do some, really exciting research and engage with companies, and it's quite likely that some of them will become very successful startups. Now, talk about some of the problems. The university is becoming more of an incubator than just a research center. Many of the student projects, the students are so engrossed in their technology that they're out trying to sell technology rather than sell a product or service. And we often then try and bring in professionals who've launched companies, possibly even chairmen or CEOs, from the business world, to actually build a credible team. And the key thing is actually switching from a deep tech project to an actually high valuation business. where the aim is to, get paying customers, grow your customer base, get venture capital from wherever, and then end up with a very valuable company. And as I point out, this is an education process, and a lot of time, it's an education for the students. In my case, that they need to think about this as how do we grow valuation rather than how do we get the most whizzy technology out the door. Fairly obvious, but it's a change of mindset. If you went back 2 years ago, I was going around giving talks on the data revolution, to lawyers and real estate people and regulators and people like that. What's happened now in the UK with the pandemic and also with Brexit is that it isn't a 2 or 3 year data science journey. It's now what I call a data tsunami. Companies and startups need to get their act together in maybe 5 months, 3 or 4 months. But the positives, so there's been a big upsurge in interest in innovation, not just in the universities, but also professionals and companies are now keen to engage. The other interesting phenomena is that we're starting to put together teams of people across the globe. So, for example, we've got a very interesting and somewhat unusual community vertical farm where people can actually grow produce in their apartments, with boxes connected together on the internet. The hardware is being developed in Singapore. The core software is being developed in South Africa, and we will be developing the applications and rolling it out and testing it in the UK with some actual major partners. So one of the things that the pandemic has caused is innovation. Lots of people are interested, but now it's globalization. When we have teams, the teams often only meet on Zoom or Skype or something like this, and they can be anywhere in the world. So you can source talent, you can set up companies in other countries just using digital systems. So it's lowering the barriers. So just to summarize, the university is a fantastic incubator, and increasingly, the students want to do impactful research and turn that into startups. And this is actually accelerating. And I expect to see, as each even month or year goes by, more and more students, not just PhD students, but even first years getting involved in startups. So I'll stop there. But thank you.
Thanks, Professor. It was a great, and you're always on time. That's one of the best things I enjoy. I have a few questions myself, and I guess Tunde will also have some questions himself. And I'm just going to kickstart the conversation, and then with plenty of Q&A coming, I'm 100% sure. But one of those questions that I have, which I think you have the benefit of time and experience, let me put it this way, is that you have been in the game for a long time. And I'm always curious about what is the difference between the students that when I came over 5 years ago to do my PhD from the student that came over 20 years ago or 30 years ago. What was the key difference, and why maybe those now are a little bit more entrepreneurial compared to the previous ones?
Well, 30 years ago, if you take PhD students, they all were looking for an academic career. And this changed probably in the last 20 years, where more and more research, pioneer research, was actually done in companies. And startups are nimbler. The famous story, if you try and innovate in a big company, it only takes one no to kill an idea. In a startup, it only takes one yes to get the idea, to take off. So if you're interested in actually doing things, and getting them out the door. Entrepreneurship is a wonderful way to do it. And there's also role models. So, for example, two of my PhD students, sold a company, for over 20 million. And this is inspirational. So, in the 90s, an excellent student might aspire to go to Goldman's on 100,000 salary or something like that. Now, an exceptional student say, why should they want to go and work, 90 hours a week at an investment bank, when I can work for 3 or 4, 5 years and maybe sell a company for, 10 million and not work for the rest of my life. So that's the changing in attitude.
Yeah, I'll let Tunde ask a question, but before that, I just want to. There's a question that I have in my mind, which is why do you think the US does a little bit better than the UK, in Europe particularly? Thinking about MIT, Stanford, etc. They managed to create so many of the tech companies. What is the difference in your view?
I think a lot of it's to do with culture. If you went back in the 90s, if you wanted to do entrepreneurship, you had to get on a plane and go to Silicon Valley. Now you see people around you in all over the world, and I think the most exciting area is Silicon Savannah, which with what's going on in Africa, because you've got exceptional talent there, and they can just skip generations of legacy technology. The other thing with the Americans, there's a more can-do culture. And one of the problems I think that we've got across Europe is in many ways, we've got a managed decline. If we don't, get our act together, it's not going to be particularly comfortable living in Europe in a few years' time. And now innovation's global. You can look at country role models like Singapore, things like this. So if you've got people around you that are innovating and doing world-class projects, doing world-class commercialization, it'll inspire all the people around you to do it, and you don't need to go. That said, the venture capital community, at least in the UK, is pretty timid. When your students tell you that some venture capital company they've talked to, just has no ambition, and that they're going to raise money in the United States, this is a sort of wake-up call for everyone. Sorry, I got off on that. So over to you.
Do you wanna add something to that?
Sure, no, thanks so much, Professor. It's really great insights and pleasure to learn from you today. I am curious to pick up on a point you just made about the data tsunami, which I do agree. There's just so much data available today and there's more coming. How do you see the role of the regulator or regulators as more of this data becomes available to keep the innovation coming, but at the same time protect the customer? How do you see that evolving over the next few years?
Yes, this is very interesting because you know the term RegTech, yes? I'm credited with inventing the term, but just so I can boast a moment. But we've done an enormous amount in automating regulation with the FCA and the Bank of England and other, and we've been involved in their, Project Innovate and Sandbox, and the view of the government at the moment, the UK government, is that companies and people are over-regulated. But as the FCA has shown, you can set up a sandbox and you can do sort of lightweight regulation while still supervising people so that you've got safe innovation. But it is a trade-off between encouraging innovation, which is necessary now, particularly to rebuild economies, and over-regulation. And at the moment, we've got 60 regulators in the UK. And so a lot of companies are actually over-regulated. And if I can sort of also take a swipe at some universities, in UCL, and I think also in Cambridge, the students own their own IP. Oxford and Imperial, the university owns the IP, and it's a big impediment to innovation. I don't know whether the government will wade into this, but I think that one of our great strengths is we just encourage students to go for it, and this is also a sort of regulation. If we are trying to, slow down innovation, people will leave and they won't innovate. So yes, regulation can be a great disincentive if you over-regulate.
Yeah, there is even you end up answering a question which is in the chat about what is the policy around UCL on ownership. So if you end up creating a spin-off of UCL, how much UCL is going to own or anything like that? I think you have plenty of experience in that regards.
Yeah. The UCL, the general view is we should do whatever we can to support you, and therefore we're very flexible. And we've set up an organization called conceptionx.org, which supports PhD students in commercializing their research alongside doing their PhD, but we also support MSc students. And this has now got over 200 PhD students from over 20 universities in the UK. And we're looking to replicate it in South Africa and also in Singapore. So this is an example where, we're doing what we can to support you.
Is just also a mention about the UCL Tech Fund, which I think raised recently, I think 150 million, or some kind of this amount of sum of money to invest on tech companies coming out of UCL. So I think there's plenty of support. There's always a quagmire, and we experienced this sometimes. We're dealing with the internal structures, but broadly speaking, there's a massive support.
Yes, I think the key thing is that the old education was that the only thing was important was raising money. The key thing is to have a brilliant idea and put together a fantastic team to deliver it, and then the money will come. Excuse me, there's lots of government grants. Companies will actually, pay you to buy innovation. So the idea and the team are absolutely the key.
Yeah. There's a follow-up question on that respect, which is someone in the chat is asking, should UCL not just take a small share of IP? Gains could be used to help feed new startups. What's your views about it?
If you look at the American universities, where they make their money is not in IP, it's in endowments. And this is shown for the generosity of DeepMind. We've got a huge amount of payback from DeepMind, from the very positive publicity, which has boosted our credibility in AI. They lecture for free on our courses. They fund students, etc. So having IP in a company is probably the exception. What you want to do is to get your students and that to innovate and so love the place that they give you a chunk of money.
I'm just going to ask Tunde to maybe make another question, but before I do that, I just wanted to talk a little bit more about the idea of enterprise research, which I find very, very interesting.
What do you want me to expand on it?
Yeah,
the students. You have to, probably I'll get killed for this, but most of the staff get promoted by writing papers. and that's the driver for academic research. The students want to do impactful research, not just impactful for money, but sometimes it's a social enterprise and such like. And therefore, the students are driven by doing something that's actually going to be used by people, which will actually make a difference in the world. What we need to do is to provide an environment to support the best students in that. And I think this enterprise research will become more important. And I think you'll see it not just in universities, but also in companies. Because companies are now looking at ways to encourage entrepreneurship. And also companies are starting to become very generous in allowing their staff to actually do a company on the side. So I think it's going to be a big deal.
Yeah. Do you wanna go for it, Tunde, or any other points?
Sure, I'll ask one. I'm also curious to see the questions from the audience as well. Mm-hmm. So I am curious, Professor, you mentioned a number of the successes your students have had in terms of unicorns and sales. What types of companies and innovations did they build? I'm curious to understand. And are there any themes that you're seeing, common themes across the company?
Yes. We basically do data science, so it's deep tech. They're all sort of they're often AI-based companies, and they're usually in the service sector. So we do a huge amount, as Adriano said, in finance and such like. But having said that, we're now looking at sort of infrastructure companies, information management, but also, as I gave the example of the of the vertical farming company. So what we started off and did most of our work in finance, but as the data tsunami, as I call it, sort of went into other sectors, we then worked in regulation and then in law tech and activity, and so it moves along. But it's in the sort of softer side of computer science, particularly in the service sector, because we've got all these big service companies around us, finance, law, insurance, real estate, etc.
Oh, excellent. I was just gonna now I'll allocate some final minutes at the end of the conversation just for general questions for you both. But now I'm just gonna open the floor for Tunde so he can make some initial considerations, and then we can kickstart again the conversation. Thanks, Tunde.
Yeah, no, thanks again, Adriano. Really great to be here today. Thanks, Professor. I learned a lot from your words. So, I mean, maybe I spend some time on my background and then why we do what we do, and then I'm happy to take any questions anyone has. So, as you mentioned, so my first, I think, proper funded venture was Jumia, which is, the idea was to replicate Amazon on the African continent. And the thinking there was, you have close to 1 billion people who are looking for goods and services, and with technology, you can leapfrog having to build physical stores all across the continent and just begin to connect goods with customers directly through an online interface. And I think it's a very interesting case study because the themes are very similar to what an Amazon does or other large online retailers, where you're helping small businesses reach customers they might not have reached, but then you're dealing with very particular problems that are unique to your context. So we did not have at the time payments, that online payments, that where the customer could go put their card online and pay for goods and services. And even though the technology was coming, there was a big trust deficit where folks said, look, do I feel confident putting my card online, knowing that that card data will be protected, but also will this platform deliver? So we ended up having to introduce other unique innovations in the market like pay on delivery, building our own logistics, but the core theme was the same, helping small business partners reach customers they would not have reached otherwise. And then with my business partner, who was the COO of Jumia, we then launched a logistics business because we saw it's one thing to have an online interface where people can order, but if you don't have the supply chain infrastructure, you can't get the goods to the customers. And we felt, look, for there to be another 10 or 50 or 100 Jumias, you would need logistics where folks could order a package, or if you're a merchant, you could warehouse the package, you could accept a payment in physical cash on online payment, and you could track the whole experience from end to end. And that business, so with Jumia went within 18 months from 0 to over 1,000 employees. With Ace, we went to up to 250 employees, serving about 4,000 merchants at the time. And then we then saw another challenge, which is you're having merchants who are selling goods, but they don't have the capital necessary to scale. Because again, you're always thinking of building the infrastructure to support the innovation. And there was no real capital markets for small businesses where I could access a loan or equity and grow my business. But we said there's so much data. There's literally so much data coming up these businesses, because as they get more digitized through e-commerce, through online payments, you now have a track record of information that you can now use to make an assessment. Do you qualify for a facility, yes or no? And that's how Lydia was born. And we now took that innovation, launched in Nigeria at the end of 2016. And we said, look, this is a problem that's global. It's not just a Nigeria issue where small businesses cannot access capital. That why can't we, go the opposite way? Typically, you're seeing folks coming from Europe or from the US onto the African continent with innovation. We said, look, we can take that innovation from Nigeria and take it into Europe. So we launched in Poland, we launched in Czech Republic, and we've seen the same level of success for our product in those markets, where we can assess you and make a decision within one day, and then keep re-underwriting you at the end of your loan program and give you better pricing, higher loan amounts. And if I step back and I think about all these ventures, there are a few things that come to mind. So one is really using data to, I guess, democratize access, because in the economies that we work in, oftentimes there are great credits, and that can be a small business looking to trade, a small business looking for capital, but there's so much information gap that the traditional funders or traditional backers or traditional vendors are hesitant to support these small businesses. Because when you hear of doing business in Nigeria or in some parts of Eastern Europe, because there's just that lack of data, people are hesitant to transact, and that hesitancy shows up in the pricing. So I would charge you more because I just don't have the data to say, look, you deserve a lower price, which then affects the ultimate end price to the customer. Then where we come in is to say, look, you know what? Small businesses worldwide deserve an opportunity to grow as long as they can show they are a credible and good actor. With data, you can now begin to remove the veil behind who's a good actor and who's a bad actor. And you can now put a lot of capital behind these businesses, and they will thrive and they will scale. And then you can help the customer to also access goods and services they would not have been able to access before. And that's been the power of what we do and the data. And then to show the opportunity to really leapfrog, right? If we were attempting to do what we're doing now, which is lending to small businesses in fast-growing economies within one day, literally it will take us a few decades to go city to city attempting to build brick and mortar branches to serve the customer. But we've gone from being able to serve 50 customers in a month to now we're processing well over 1,000 loans per month. And the next step change will be close to 10,000 loans per month. And if you think about just the equivalent, and we do this with 50 people around the world, right? So, and if you think about the equivalent manpower and cost to do that for a traditional lender, you can't compare. And that just shows the opportunity that data provides, backed by the level of processing power we have today. The one thing I will say though is, as we make this transition to being more accelerated digitally, there's still a mix of, I'd say, man and machine and some human touch, because for a lot of our customers, even though they are willing to take the innovation because they need these goods and services so badly, and they're happy to try you because the alternative that they have going to a bank and having to put down physical collateral, 5 years of audits, 3 years of projections is just not feasible for most small businesses around the world. So they will try your innovation, but at the same time, we try and introduce empathy into the process and still give you the opportunity to speak to a human if you do have questions around what does it mean to take on credit? How is this going to impact my credit score? How can I get a future loan in the future? Should I pay back? And what we see is after 2 to 3 loans, the customer then goes fully digital, where they say, look, now I understand the process. I had all my questions answered. I now can fully go through by uploading my data, getting an answer, making a decision on my own, and accepting the loan. So I do think it's clearly a way to open up access in a way that hasn't been done before. But at the same time, we cannot rush the customer overnight to say, look, you went from dealing with human beings to now only dealing with machines. There has to be a bit of a bridge in between that.
I think it's excellent. One thing that I found most remarkable from your considerations today was the idea of building platforms, and from creating value. When you build that platform, you can get some of the value for you back. And I think the Amazon story, creating the marketplace, and then the other bits, it's pretty much on that same spirit. And I guess Jumia, the last mile company, and the and now Lydia, is pretty much about that: create value to others, and finally you're gonna reap something back. And a question that someone asked, and I think it's quite interesting, is what, and you're an entrepreneur yourself, what motivated you in the first place? If people wants to hear your founding story and how things came about.
Yeah, it's an interesting story. So I think probably I was maybe born to an extent to be an entrepreneur because my parents are entrepreneurs. So I grew up in a house where my dad and my mother both own businesses from a very young age. And so you see the impact you can have as an entrepreneur in your local community. So my dad was an engineer. So if you're putting up a building, you talk to him about the electrical, the structural work, and he would help you to get your building off the ground. And my mother owned several businesses over our lifetime. So everything from a fast food restaurant, a video game store, a bakery. I think I got most of my entrepreneurial spirit from her. And so you see the impact you can have, and you see the joy you have from being the captain of your own destiny. At the same time, you also see the challenge where you're dealing in markets where infrastructure challenges, it's tough to get funding for your business, and the skill sets you need typically to thrive in your particular venture are not readily available. So we grew up a lot. People are studying to be a lawyer, to be a doctor, and in today's world of digital skills, it's tough that those skill sets are not readily available for your venture. So I took that from my parents, but I took a very traditional route before I came back to entrepreneurship. So I was a banker for 4.5 years doing investment banking, went into business school at the height of the financial crisis. And that gave me a chance to really reset and step back and evaluate what I wanted to do. And I always came back to wanting to have an impact and wanting to be back on the continent to help my country and the countries on the continent advance. And I really thought that entrepreneurship is a great way to do that, because not only are you helping the customer to your point, have a platform that can help them thrive and grow, but you're also creating a lot of jobs and you're helping people build the skill sets that make them competitive in a global workforce. So now you have folks who know how to do digital marketing in a world-class way, or know how to assess a customer using data, or know how to build a supply chain in a world-class way. That's what motivated me.
Excellent. Before I let Professor Philip make some remarks and ask a question, is it one thing that I was thinking when you're talking about Lydia and providing loans to small businesses is that we're creating a business ourselves at the moment, and it's I understand there's a different types of businesses, of course, and but you see that there is a possibility going forward that a Lydia type model could be employed to raise, maybe seed investment, maybe Series A investment, etc. Do you see that coming through sometime soon with the access of data, with the access of AI, etc.
So I want to make sure I am clear on the question. So are you saying, do you think a platform like ours can raise venture capital, or you have, well, I hope so, because that's what we use to grow our business. So we've now raised just under $10 million in venture capital. We're most likely going to raise more capital this year, equity and debt, to support our growth. And to the point that Professor made earlier, I think everyone understands that data is a big part of our future across multiple industries. And the pandemic, which of course was devastating from a health perspective and life perspective, but at the same time, from a business perspective, I think it accelerated a lot of things that people knew were coming. So if you had a strategy to become more digital in 2 years, 3 years, 4 years, you have to figure it out in 2 weeks or 2 months, right? And and there's a lot of venture capital going into a number of these different sectors to really wrap your mind around how can we use data to make sure we can serve our customers in a world where they may not be physically able to see us every single day, right? And I think that's where it's a unique opportunity for students, entrepreneurs, potential entrepreneurs, because if you have an idea that you can test and you can show that the customer is willing to try you and they feel like your idea is 10 times better than the brick and mortar alternative, there's a lot of capital out there right now looking for yield, particularly given what's happening with rates around the world. So I do think there's a lot of capital chasing good ideas.
I'll let Professor Philip.
I really enjoyed your presentation. I think your journey is brilliant. And the thing that I took away that I'd like to emphasize is the fact that you started off doing something very well, focused, and by doing what I would call experimentation, you got all these other opportunities started to spin off from it. Okay, so the next big thing is you could be the biggest venture capital company in particularly in Africa for example, and it's grown out of because you've been trying to do things, whereas there's a tendency, I think, possibly caused by the education system in the UK, what we call analysis paralysis. They spend all the time discussing in details, the ultimate solution, but nothing ever gets done. Whereas, your journey is a good example. Do something exceptionally well, it takes off, and then it starts to generate all sorts of new ideas, like your logistics your loans, venture capital, so you can say after you've done your venture capital, what's going to be the one after that? What's the one you're dreaming of? That was a question.
That's a question. Yeah. No, I deliberately paused for that. No,
but I hear about it, Tunde.
It's your point is spot on, Professor. Like the ecosystem builds, right? Because clearly, once you start one part of the ecosystem, there's so much else that needs to be ready. Because I think we take for granted. So I'm dialing in today from the States because I'm here visiting some family, and we take for granted, if you are launching a business today, North America and Western Europe, you can almost take for granted access to payments, access to supply chain, access to infrastructure to support your venture, and to an extent, access to student talent to also come into your venture. But in a lot of these economies, what they have going for them is a big market, so large GDPs, big gap for your product. But beyond that, they don't have the supporting infrastructure, right? And so if you have one shoot that does well, the opportunity for other entrepreneurs is, look, I can now come and help you with warehousing, or I can come and help you with debt collection, I can come and help you with payments, whatever else it is. So for me personally, 100% now focused on Lydia. We are optimistic this is going to be a 50-year plus venture for us. So nothing else on the horizon as of now.
Okay. I don't believe you, but we'll pass on that. But it was like you were saying that when you've got talent around you that know how to market on a global scale and things like this, you're then in a much better position to launch, even an advertising company or something like a digital advertising company or something.
Spot on. No, it's a point that, Adriana and I discussed a few months back. A lot of this is really a talent game, right? Which is the underlying, one of the underlying pillars I see of the programs you run at UCL, the access to great students, great talent who can help really interrogate an idea, execute it, and take it to the next level, which is why I think, it's such, the more you can equip at least for us on the African continent, our kids and our students to be globally competitive. I think nowadays opportunity is becoming more and more democratized. If you can speak the language of code, if you can speak the language of data, if you can speak the language of analytics, there will be opportunity for you.
That's a very good point, because we've got around 300 PhD students, 650 master's students, and 500 undergraduates in the department. And it's an amazing talent pool. And you can seed ideas in them, and they just form teams and get on with it. And because we're a talent pool, we've also got students that have been through the department. We've got collaborations with all the big corporates and things like this. So there's this sort of amazing virtual talent pool all over the world that you can now start to put companies together, using Zoom and things like this, and people just take it for granted. So we're in a game-changing situation.
I just want to, if I put a question to you both, which is a question that sometimes we struggle with. It is usually not as much as we used to struggle, but I think for a lot of people that wants to start a company, like a startup, what usually are the next steps? And the first steps, and not only the first steps, but also the first things to avoid when you're going for the first. When you're going about trying to start your own startup. Maybe Philip, go first.
I was going to say, do something small, and look for a good idea. Probably you'll need to change it. Get a team around and just do something very small. That's why I think this way of actually getting students to just do their project, do the final year project. I give you an example. We still do an enormous amount in finance, and one of the final year undergraduates is doing an AI system in Arabic financial data. And this is, state-of-the-art research, and is essentially an undergraduate. And this actually, we then realized, hey, we've got students from every European country, Russia, China, Japan, Brazil, and other. We can actually scrape every commercial market for financial data, and the question is, how do we use this for trading? But this is an example. Is that we've got this talent, and the talent can do things that even probably big investment banks can't do without huge overheads. And so I'm hopeful that that's going to turn into a really not just interesting projects for the students, but we can do an interesting asset management system with it.
Tunde?
Yeah, no. So it's a simple question, but also it's such a very complex question. I think there are some structural things that you have to do that I think increase the probability of your startup being successful. So it can be as simple as where you incorporate your business and the type of business you incorporate. And this is depending on the type of capital that you're trying to raise, it can become very important. So for example, if you're looking to raise money from Silicon Valley in general, they like investing in Delaware C corporations, not because it's the most tax efficient vehicle to invest in, but at the same time, it's a vehicle that they understand completely. And so that reduces the hurdle for investment. And so structural things that are simple as that are very important. The second thing I will say is it's really spot on what the professor just said. I think oftentimes as entrepreneurs and as folks who are lovers of technology, you want to build the biggest, most fancy product to launch. But the reality is that if you're truthful, you really have no clue what your customer wants yet. You have an idea what your customer wants, but you have not put it into the wild yet for them to interact with it. And then for you to take those learnings and pour it into a product. And so you can spend 6 months building this fancy thing. You put it out onto the road and you realize that the customer didn't want a Ferrari. They actually wanted a simpler car, right? And so whatever you can do to test and invest and to get some traction, it might be a website that's not the most aesthetically pleasing website. It might be using Excel tools, whatever you can do to show some traction and get closer to the truth of what your customer wants. I would advocate for that, because once you have that insight, you can then begin to use the technology to accelerate that insight rather than vice versa. So I'd say there's some simple, just structural things you have to do. And those are things that you can find out just by talking to folks in the venture capital or the other entrepreneurs. But then the thing I counsel entrepreneurs against is really, as quickly as you can get your product into the wild, do it. Find out data, find out what your customer wants, and then build on that insight.
Yeah, very, very good advice.
Just a question specifically to Tunde, and probably Professor can also add something about it, which is you grow your business first in Nigeria and then you expand most of those businesses. And how do you see now if you bring a business from, let's say, from Europe to Nigeria, how do you see the other way around working at the moment? Do you see there'll be, of course, a need for adaptation, but how difficult is to crack the Nigerian market in your view?
Yeah. So every market, I think, has its unique peculiarities. If I think back to what helped us increase the probability of success, is just from the beginning having a process. So what I mean by that is, before we expanded into these countries, particularly with Lydia, we had a process of particular parameters. So desk research and field research, where we said, look, you know what, the only kind of constraint where we want to build a global business, the only constraints we'll put on ourselves is nowhere more than 3 hours time zone difference from our current operations. Because we felt to ourselves, look, if we are tempted to expand into Asia or into the Americas, just the time zone alone would make it too difficult to manage those businesses without one of our founders physically moving to that location. So that then limited the markets we looked at to the African continent, Europe, and then some parts of the Middle East. And then the second thing we now said to ourselves are, for our type of business, what data points are important for us to assess? So we looked at size of the market, so things like GDP size, SME credit gap. We looked at, I'd say, resilience of the economies, because a lot of our money is raised in hard currencies, dollars, pounds, euros, but then we deploy in local currency. And so we then need to understand, if something should happen to an economy, can the country defend its currency? So looking at things like currency volatility, FX reserves, trade balances was very important to us. And then the third thing was now around competition. So for our type of product, why do we think we can win? Like, generally asking ourselves that question: do we think we're 10 times better than the alternative for the customer in the market? And so we looked at things like lending products, alternative finance, traditional finance, etc. And then that then shortlisted some countries and regulation, of course, as well, because it's for finance, it is very important to understand what type of regulation, cost, and time to get particular licenses in particular markets. And that then led us to shortlist the countries that we're in. But then we then married that desk research to on-the-ground research, actually going to the countries and seeing, does what we're seeing on paper actually make sense? And we then typically went through local chambers of commerce, where typically every country will have a invest in X. And then through those entities, we then were able to understand potential partners that could help us around governance, incorporation, licensing, acquiring customers, etc. And once we did that, we got more confidence that we could launch and we could succeed in these markets. So I say all this to say, I think it's all down to your individual company to understand, look, what parameters are important for you to have a chance of success, and then running a process to really test those assumptions and see, are these particular countries ready for you? Because if they are not, I find that it's very tough. And the one general point I'll make, which I think applies to any country, is really to ask yourself, does this country have the infrastructure, digital or physical, to support my business, right? And what I mean by that is, a big challenge we saw with Jumia is you're launching an e-commerce venture, but at the same time, you're in a country where infrastructure is challenged. So actually going from state, in some cases, it was cheaper for us to fly goods from state to state than to go by road. And you can imagine what that means in terms of passing on cost to the end customer. We did not have a digital payments infrastructure, so a lot of payments are collected in cash. And this is important because we had to actually build these things ourselves, and we're fortunate that we could raise the venture capital to do it, but not many ventures can have that luxury. And you want to, I find, ride a wave. So look, there's the infrastructure to support me to launch my product already. So there's payments, there's whatever is relevant to you, versus trying to build it yourself, because then even if you have a good product, you just have so many hurdles that make it difficult for you to succeed.
That's a very good point about you know, if I was trying to set up a similar business in you know, in Africa, the barriers to entry would kill me because I don't understand them and I don't know how to get around them. You're there, you understand what you need to do to make it work. So that's actually an advantage to you when launching a business there.
Yeah, spot on. And I think, and it's a really important point. It's a subtle point, but very important point, because, and it's one thing that we saw as we launched into Eastern Europe, in that the core of our product is the same, right? So we do loans to SMEs, assessing within 1 day, but we localize, I'd say, the 20 last mile of the product, last 20%. So for example, in Nigeria, our product has a particular, for the customer, it looks different to how it looks in Eastern Europe. So the repayment schedule, the pricing, how we communicate it is different, because how customers interact with credit is different to how they interact with it in Eastern Europe. And so you have to be conscious of that. So we are able to accept data in whatever format. We can digitize it, we can pass through, we can make a recommendation, but then how we communicate it to the customer, how we price it to the customer is unique per market. Yeah. And so it's important not to think you can just land and force the customer to take something that worked in the UK or the US in Nigeria. Most times I find that will not work.
Yeah, but the other good thing is you've got the sophisticated team now that understand how to do this. Building that is going to be very expensive for any competitor.
Yeah,
exactly.
Yeah, we're just like 3 minutes to go, and I wanna ask a very cheeky question, which is probably it's a bad idea to finish the conversation. It's a question with two, and I would like almost a succinct answer. Is where do you think is the next? We talk about $1 billion all the time, but what is the next $1 trillion company in your view? And then the second one is some countries, they are not, let's say, mature enough for tech. Someone is asking in the chat about Tunisia, which is a kind of very small country. How do you see cracking that kind of market? Is it better to start outside and then try to move in Tunisia, or start from Tunisia itself? So it's two difficult questions, but I just want to finish with that.
You go first, Tunde.
Yeah. Okay.
Then I'll try and say something irrelevant or irreverent.
So maybe I'll take the second part of your question first. So on markets, I think ultimately I find that customers understand innovation, right? And they understand value. Customers understand value. And I say that because before we launched Jumia in Nigeria, I mean, it was said for years, e-commerce in Nigeria would never work for a multitude of reasons, right? But it worked. And that business went public, 3 years ago on the New York Stock Exchange, which people thought was almost impossible a year ago. And the value the customers understood was, look, instead of me having to go build a physical store, pay rent up front, buy all these physical goods, I can literally just load a store on a platform and I can sell across the entire continent. And once they got that, they then powered the business. Of course, there are things you have to do to make it easy for them, but I'd say if you offer true value, a customer gets that. And the question for you now is, are you really the best person or not to deliver that value, right? So I find don't underestimate the customer. And on the second one, the next $1 trillion idea, I wish if I knew I'd be investing in that myself right now. What I will say though is that one thing I have seen is a lot of these businesses have been around for centuries, right? If you think about credit, it's been around since the beginning of time. I think the only difference to what's happening now is we are just accelerating the time to make a decision, and we are delivering it to the customer in a way that's 10 times better than anybody else, right? And so I think oftentimes what you find that these industries, they will constantly stay the same. The difference just is your solution compared to the alternatives 10 times better. And I think there are opportunities in healthcare, in education, and for sure, I think in power and capital markets.
Just two quick answers. I think food scarcity is going to be a bigger problem than climate change very, very soon. That's why I think I'm interested in this vertical farming idea. In terms of technology, I think personalization and personal avatars and personalized algorithms are going to be a big deal going forward. So, it'll be, your digital twin going out there doing things for you. That's just, okay, good.
Okay. Well, on this last note, I would like to thank Tunde and Philip for their fruitful participation, insights provided. Special thanks for Emre Kazim for the coordination and content curation. Thanks for the UCLI Center, Computer Science, Faculty of Engineering, and Innovation Enterprise for sponsoring our activities. Please subscribe to the UCLI Center YouTube channel and Twitter page. Follow the UCLI Insights LinkedIn page. In a month's time, we will be hosting the Algo conference. Tunde will be presenting there. Maybe Philip will have to show up to save us.
No, I'll leave it to Tunde to do it.
Yeah, please keep tuned for more updates. We'll be back with UCLI Insights in 2 months' time. So see you in the next 2 months, and goodbye, and see you all soon.
Okay, thank you very much. Goodbye.
Thanks everyone.
Thanks, Philip.